We have Stephen Bartrop, the managing director of LimeStreet Capital, joining us from Sydney today. We have LimeStreet being an investment firm that evolved from a pure research business and now, I guess, advises clients on which stocks to put their money into. Stephen, a good morning to you. Thanks for joining us. What do you think of Wayne Swan's statements that he is not going to back down here?
Look, it certainly creates an issue for Australia, and no doubt you've seen that the mining sector is dead set against it. But I think if you look from the investment perspective, it really undermines some of the value of many of the Australian resource projects, and that obviously will reflect back through to Australian mining stocks.
Okay, but what about this 40% levy, and what does it mean for balance sheets? I mean, we have suggestions that this may even raise borrowing costs by 3 percentage points for these smaller miners. I mean, that means, I guess, higher fees and a bigger burden for them.
Look, it certainly does. We've done quite a bit of independent modelling, and we've looked at, you know, for example, a typical copper mine that may have an 8-year mine life and 1.4 million tonnes at a typical grade of 2.5%. Now, if we apply the resource super profits tax, we find that the tax burden basically decreases the net PAT over the production years by around 25%. So if you translate that through to a mining stock, essentially that means that the net profit's going to fall in a production year by about 25%. So the value of that share has got to fall by about 25%.
Okay, and do you think that's actually going to happen? I mean, is this realistic for these shares to drop about 25% during that time?
Look, I think what we've seen so far is there's been a lot of confusion in terms of what is actually what's actually going to take place and how the tax will actually take effect. So I think from a general perspective at the moment, we've seen general resource companies sold off, and that tends to be a global movement where, you know, look, this sector is too hard, we don't know what this tax is going to mean, therefore we'll exit. But as we go forward, it's certainly going to affect Australian domiciled stocks that have Australian domiciled projects. Now, an example would be, for example, 3 copper stocks where we've got Equinox with a copper mine in Zambia. We have Panost Australia, or Panost, which has got mines in Southeast Asia, a Chilean copper project, and then we've got Oz Minerals, which has the Prominent Hill mine in South Australia. Now, as we go forward, both Panost and Equinox will not be subject to the profits tax, where of course Oz Minerals will. So theoretically, we should see an outperformance by Panost and Equinox relative to Oz Minerals, and the cost of capital for Oz Minerals basically go up as its share price falls.
Okay, well, you talked about these copper stocks, Stephen. In fact, I guess these are the smaller names, if you can call them that, in the Australian market. You're still advising investors, though, if we do see this levy, to go in and buy up these big names such as Rio Tinto and BHP, because, frankly, they're cheap right now.
Look, that's right, and also I think there are other aspects to the tax, in the sense that what you will do is you'll change the behaviour of miners in Australia. For example, it's all about, you know, companies tend to optimise, or they tend to optimise their mines and their projects, smelters, for example, in terms of, you know, minimising margins in high tax regimes, which unfortunately Australia may become, and then maximising margins in lower tax regimes. So, for example, if you had a copper mine in Australia and you had a smelter in Southeast Asia, you might find that, or you may find it more economical to produce a low-grade concentrate in Australia, therefore your margins will be lower, and then transfer that low-grade product to Southeast Asia where you capture the margins in that regime.
Stephen, nice talking to you. Thanks for that. Stephen Bartrop of LimeStreet Capital.